Hi, I'm Lango, and this is InvestorPlace Quick Picks, where we communicate to you some of the market's best investment ideas in just 5 minutes. Today, we're going to be talking about one of my favorite long-term growth investments for the next 10 years. The name Opendoor, ticker IPOB. Now, Opendoor is an e-commerce platform where consumers can buy, sell, and view homes online. They're basically trying to be the Amazon of the real estate market. And that's a really exciting value proposition because this $1.6 trillion real estate market is 99.9% physical today, but because it is wildly inefficient, it is ripe for significant and widespread digital disruption over the next 10, 15, 20 years. Leading this disruption will be Opendoor. And Opendoor by 2030, 2035 will be multiples larger than what it is today. And IPOB stock price, it will also be multiples larger. I see this as a potential 10x, 20x investment over the next decade. So needless to say, I think Opendoor stock deserves to be in your portfolio right now. Have you ever sold a home? If so, then you probably know as well as I do that it is the worst process on the planet. Okay, it takes forever. The average time to sell a home is 3 months, 90 days. That's a fourth of a year. It's also super expensive after agent fees, after seller concession fees, after staging costs, after closing costs. You're talking 10% or more of the home, of the sale price gets taken off right off the top. Okay, it's also exceptionally complex. Each home sale, one home sale, there are an average of 6 counterparties. A lot can get lost in translation there. And above all else, it's exceptionally volatile. Roughly 20% of potential home transactions fall through because of inflexible timelines, buyers backing out, financing delays, a various number of reasons. So from start to finish, selling a home is a timely and costly headache for the home seller. It's probably, as I said before, the most inefficient shopping process in the world today. And that, of course, begs the question, why on earth is it so inefficient? Well, it's so inefficient because the real estate market is stuck in the Stone Age. If you'll remember, buying electronics used to be a very inefficient and cumbersome process too, right? You had to get in your car, you had to drive down to the Circuit City, you had to fight through crowds of people at the Circuit City, you had to talk to a sales rep, you had to find the product, you had to grab the product, you had to go and wait in line, you had to check out, you had to pay, you had to get back into your car, and you had to drive back home. That's a pretty laborious, cumbersome, and inefficient process, but then along came Amazon, who created an e-commerce platform that centralized and streamlined the whole process and essentially made buying electronics as easy as opening up an app, searching for the item, and clicking buy, and that was that. The moral of the story, when things go digital, they get more efficient. Wayfair is doing this in the home goods market. Carvana is doing this in the automobile market. Chewy is doing this in the pet foods and supply market. Across all retail shopping processes, every single vertical out there, the shopping process is being digitized, simplified, streamlined, and optimized for your convenience. Except for in the real estate market, where last quarter, less than 0.1% of homes were sold online. So the rest of the world is sprinting headfirst into the digital era, and the real estate market is 27,000 miles behind. That won't exist forever. Opendoor today is pioneering a breakthrough e-commerce solution to leapfrog this enormous $1.6 trillion industry that's still stuck in the Stone Age and leapfrog it into the modern era. And as Opendoor does that, this company and this stock price will roar higher over the next several years. Now, Opendoor is an e-commerce platform where you can buy, sell, and view homes online. And basically what the company does is acts as a virtual flipper. So if I want to sell my home, I can go onto Opendoor, I will sell it to Opendoor, they will charge a 5% service fee. then they will hold the home for a couple months, get that short-term market price appreciation, sell the home at a little bit higher of a value based on that short-term time appreciation, and the money they make is based on that service fee and the tiny margin they make there. Yes, that does mean this company will have slim margins forever and ever and ever and ever and ever, but so does Amazon. And the play is that economies of scale, as Amazon sold a whole bunch of retail items, as Opendoor sells a whole bunch of homes, these tiny margins on a huge revenue base will equal huge profits. Of course, all of this is predicated on the idea that Opendoor has created a better way to buy and sell your home online, and indeed, they've done just that. So the Opendoor process of selling a home is faster, cheaper, more convenient, and offers superior peace of mind. It's faster because basically Opendoor can sell your home in just a few days. You go on the website, you answer a short questionnaire that takes maybe 5 minutes at most. They give you an immediate price on that. Then you schedule a quick video tour maybe the next day. They cement the price, they finalize an offer, and bam, you can sell your home in as few as 3 days. That compares to 90 days for the traditional process. So you significantly reduce the time it takes to sell a home. Now it's way cheaper. This is the big one. It's way cheaper because agents, real estate agents, they're taking 6%. Right, it goes 3% to the buyer's agent, 3% to the seller's agent typically. That's a huge fee. And what Opendoor does is essentially axes that out. They replace that with a 5% service charge, which yes is only 1% delta, but in that 5% service charge, they're also covering seller concession fees, 2%, and they're covering staging costs, which can be about 1% of the value of the home. So they're basically reducing 3 to 4 points out of the system, all in cost of selling traditionally 10% or higher. Selling to Opendoor, 6%. So by getting rid of the agent, they've reduced profit takers in the supply chain and have made it way more cost effective for you to sell your home. Now, beyond cheaper and faster, it's also far more convenient, right? As we said earlier, 6 counterparties per home sale in the traditional model. In this model, it's just me and Opendoor. It's 2 parties going back and forth. Nothing's gonna get lost in translation. There's no negotiating. They give me a price, I either accept it or don't, and that's that. Super simple, super straightforward, and it offers greater peace of mind. Because it is super straightforward and it's just me and Opendoor, there's no 20% fall through because of financing delays or buyers backing out or whatever it may be. If they give me a price, I like it, I say yes, that is that. And that's it, that's the end of the process. I get my money and the home's off my hands. So it's just across the board, a significantly superior way to sell your home. I get it. A lot of people may not be comfortable with doing it right now, but 20 years ago, a lot of people weren't comfortable with buying stuff on Amazon.com. 10 years ago, a lot of people weren't comfortable with buying cars on Carvana.com. Today, a lot of people aren't comfortable with buying homes on Opendoor.com, but guess what? Just as Amazon has reached ubiquity in retail items, just as Carvana is on the cusp of reaching ubiquity in the auto market, Opendoor too will reach ubiquity across the real estate market. This market, make no mistake, will be tremendously digitized and disrupted over the next 10 to 20 years. Opendoor is at the heart of that disruption. Now, Opendoor is the first mover in the space, and because of the first mover, they have unparalleled size. And when I mean unparalleled size, I mean truly unparalleled. Like Amazon to everybody else in e-commerce, that level of unparalleled. They operate in 21 markets. They've served over 50,000 homeowners. They've sold over $10 billion worth of homes. They've grown the amount of homes sold between 2017 and 2019 by over 500%. And they are 4.4 times larger than their next biggest competitor. Perhaps more impressively, they've only been in Phoenix, which is one of the more mature markets, for 4 years. And in just 4 years, they're already at nearly 5% market share. For perspective, it took Amazon 30 years to reach 5% market share in the US. So the fact that Opendoor is at 5% market share in Phoenix already in just 4 years speaks to the fact that this company is on a breakneck growth trajectory. Okay, now this is really important because unparalleled size today creates a foundation for network effects to sustain market leadership for the foreseeable future. Right, because Opendoor is a marketplace. If they have more sellers today, it means they'll attract more buyers tomorrow. And if they attract more buyers tomorrow, it means they're gonna attract more sellers the day after that, which in turn is going to attract more buyers, who will attract more sellers, who will attract more buyers, more sellers, so on and so forth. It's a virtuous growth cycle. It is network effects kicking in a marketplace. And because of that, Opendoor will take today's unparalleled leadership positioning and sustain it as this market, the online real estate market, booms and booms and booms over the next several years. And as that happens, my numbers say that Opendoor, this is $100+ billion company in the making. And it could be a $200-300 billion company if you start to see online penetration rates in the real estate market look more like they do in traditional e-commerce. But at the very least, I think this is a $100 billion company in the making. The market cap today is around 10 billion. So I think this is a 10x, maybe a 20x, 30x investment over the next several years. Well, that's all we have for this edition of InvestorPlace Quick Picks. I hope you liked what you saw. If you did, please subscribe, hit the notification bell, smash the like button, or if you'd like to read, come over and visit us at InvestorPlace.com. We have some of the market's best analysis. Until next time, cheers and happy investing to all.